Have you ever finished a trading day, looked at your results, and thought, what just happened? One minute you're up, the next you're down, and it all feels like a blur. You know you made some good calls and some bad ones, but you can't quite put your finger on asterisk why asterisk. If this sounds familiar, I want you to stick around, because today we're talking about the single most powerful tool you can add to your trading arsenal, and it's not a fancy indicator or an expensive algorithm. It's a simple trading journal. Now, I know what some of you might be thinking. A journal? Isn't that just extra work? I'm here to trade, not to write essays. I get it. When I first started, I thought the same thing. I was so focused on finding the perfect entry and exit points that the idea of documenting everything seemed like a waste of precious time. But let me tell you, my trading didn't truly start to improve. I mean really improve, until I embraced the habit of journaling. It was the game changer that turned my chaotic guesswork into a structured, profitable business. So, what exactly is a trading journal? At its core, it's a detailed log of every single trade you take. But it's so much more than just numbers. It's your personal trading storybook. It captures not just the what you bought, at what price, when you sold, but also the asterisk why asterisk. Why did you enter that trade? What was your thesis? What was the market sentiment? How were you feeling at that moment? Were you confident, fearful, or maybe a little greedy? This context is pure gold. Let's break down why this is so crucial. First and foremost, a trading journal helps you recognize patterns not just in the market, but in yourself. You might look back at a month's worth of trades and notice something fascinating. Maybe you discover that you were incredibly successful with a specific setup on a particular day of the week, like trading reversals on Tuesday mornings. Or perhaps you realize that almost every time you try to revenge trade after a loss, you end up losing even more. These are patterns you would never spot in the heat of the moment. Your memory can be tricky and selective, but your journal, it's an objective record of the facts. It holds a mirror up to your trading habits, showing you the good, the bad, and the ugly. This brings me to my next point: improving your strategy. Every trader has a strategy, whether it's explicitly defined or not. The problem is, without a journal, you have no way to concretely test and refine it. Let's say your strategy is to buy a stock when its 50-day moving average crosses above the 200-day moving average. With a journal, you can track every single time you took that trade. After 20, 30, or even 50 instances, you can look at the data. What was the average profit? What was the average loss? How many times did it work out? Maybe you discover the strategy works 70% of the time, but only in a bull market. Or, B, it works best on tech stocks but fails miserably on industrials. This is invaluable information. You can then tweak your rules, add new filters, and systematically make your strategy more robust and more profitable. You're no longer just guessing. You're using data-driven evidence to evolve as a trader. Another massive benefit of journaling is emotional management. Trading is an emotional roller coaster. Fear of missing out, or FOMO, can make you jump into a trade too early. Fear of losing can make you sell a winning position way too soon. Greed can make you hold on for that little bit extra, only to watch all your profits evaporate. By writing down your emotional state before, during, and after each trade, you start to connect your feelings to your results. You might see a clear correlation. Every time I feel anxious and force a trade, I lose money. Just the act of writing it down creates a moment of self-awareness. It forces you to pause and ask, am I making this decision based on my strategy, or am I letting my emotions take the wheel? Over time, this practice builds incredible discipline. You learn to recognize those emotional triggers and manage them before they can sabotage your account. Your journal becomes your personal trading psychologist. So, how do you actually start a trading journal? It doesn't have to be complicated. You can use a simple spreadsheet, a dedicated software, or even a physical notebook. The tool doesn't matter as much as the consistency. For each trade, you should record the basics, the date, the ticker symbol, the entry price, the exit price, your position size, and the profit or loss. But don't stop there. This is where the magic happens. You need to add columns for your why. What was your setup? What technical or fundamental analysis led you to take the trade? What was your initial stop loss and profit target? Then, add a section for a post-trade review. What went right? What went wrong? Did you follow your plan? If not, why not? And finally, a column for your emotional state. A simple rating from 1 to 5 for confidence, discipline, and patience can be incredibly insightful. Let's walk through a real-world example. Imagine you just shorted a stock because it hit a key resistance level and the RSI was overbought. You'd log all the entry details. Your why would be, bearish setup at major resistance, confirmed by overbought RSI. My plan is to take profit at the next support level, and my stop loss is just above the resistance. Later, let's say the stock blew right through the resistance and you got stopped out for a loss. In your review, you might write, I followed my plan perfectly, but the market had stronger momentum than I anticipated. The overall market trend was bullish, which I didn't give enough weight to. Lesson learned, pay more attention to the broader market context, even for a short-term trade. See how powerful that is. That single loss just became a valuable tuition payment for your trading education, all because you took 5 minutes to document it. Without the journal, it would have just been another frustrating loss. Consistency is key. You have to commit to documenting every single trade, win or lose. Especially the losses. The losses are where the most valuable lessons are hidden. It can be painful to revisit your mistakes, but that's where growth happens. Make it a part of your daily routine. At the end of each trading day, take 15 to 20 minutes to fill in your journal while the trades are still fresh in your mind. Then, at the end of each week, set aside an hour to review all your trades. Look for those recurring patterns, both in the market and in your own behavior. Ask yourself, what's my number one trading mistake this week? And what's one thing I can do next week to avoid it? This weekly review process is what compounds your learning and accelerates your journey to consistent profitability. Think of it like a professional athlete reviewing game tapes. A quarterback doesn't just forget about the last game and move on. He sits down with his coaches and analyzes every single play, the good passes, the bad throws, the missed opportunities. He does this to find his weaknesses and turn them into strengths. Your trading journal is your game tape. It allows you to become your own coach. It's the ultimate tool for accountability. You can't hide from the data. The numbers don't lie. They will show you exactly where you need to improve. In the end, successful trading isn't about finding some magic holy grail. It's about developing a professional process. It's about showing up every day, executing your plan with discipline, and having a system for continuous improvement. A trading journal, the foundation of that entire process. It transforms trading from a gamble into a skill-based performance business. It's the difference between being a recreational amateur who gets lucky sometimes and a professional who has a real, sustainable edge. So my challenge to you today is this: start your journal. Right now. Don't put it off until tomorrow or next week. Whether you made a trade today or not, set up your template, decide what you're going to track, and commit to filling it out for every single trade you take from this moment forward. I promise you, if you stick with it for the next 30 days, you will learn more about the markets and yourself than you have in the last year. It will be the best investment you ever make in your trading career. Thank you so much for watching. I hope you found this helpful and that it inspires you to take your trading to the next level. If you got any value from this video, please give it a thumbs up and consider subscribing to the channel for more content just like this. And I'd love to hear from you in the comments below. Do you keep a trading journal? What's the most valuable lesson it has taught you? Let's share and learn together. Until next time, trade smart and trade safe.